Top story this half hour, the Santa Claus rally just rolls on. Futures pointing to gains once again this morning as Wall Street gears up to finish 2019 at record highs. Dow up 28, Nasdaq up 7. The Dow and the S&P closing in record territory. That's Friday's close. Dow up 23, S&P up fractionally, Nasdaq down 15. It did end the week, the Nasdaq with a slight loss, snapping an 11-day winning streak, but it is up more than 35% in 2019. Janney Montgomery Scott, Chief Investment Strategist Mark Luschini is here. Mark, I mean, unbelievable. We're looking at the market numbers. They continue to go up. We just got a headline from the South China Morning Post reporting that the Chinese vice premier will come to the U.S. and is ready to sign phase 1 of the trade deal on Saturday. Does this mean that January 2020, the bull market continues? If not, goes Dow 30,000?
Well, I think overall in 2020, the market goes up. I would not be surprised to see a little consolidation in here simply because we've closed the year so fast, so hard. And among the leadership, of course, is the tech names. And some of the valuations suggest that perhaps investors need to curb their enthusiasm a little bit. I don't know how many times we can continue to positively discount this phase 1 trade deal along with USMCA, the lack of a hard Brexit and so on and so forth. But I think generally speaking, we're set up for another good year, even if it means we have to rest a little bit before we resume the advance.
Yeah, Mark, Steve here is laughing, and I don't know why. Did you laugh at Dow 30,000, or did you laugh at the China trade deal?
What I was laughing at, Mark, is just that, you know, just a few months ago, remember all these economists and people in the media were saying a recession is right around the corner and we're going over a cliff, and now we've got this boom market and we've got this, you know, exceptionally strong economy. What would you say would be the worry signs that you'd look for in terms of 2020, in terms of keeping this economy on this 2 to 3% growth path that we're on?
Well, I agree. There was a lot of pessimism, particularly it seemed to have peaked in August of this year, but that faded as we go into the end of this year. And the worry that I would have is that what we're starting to see tentative signs of is improvement of global growth abroad. We know that China's been stimulating their economy to try to stabilize growth, and it has huge effects to other economies like the emerging markets and Europe alike. And should we continue to see that evolve positively, that would be a good framework for the U.S. economy to continue to persist its strong economic pace. Should that not develop and business worries start to surface again around whether global growth is decaying, or should we not see some migration towards some kind of phase 2 deal or 3 or 4 or however many we're going to have with China, business sentiment could deteriorate. And that's what we saw this year. And if that would occur, that could bleed into consumer sentiment. And that's been the major force propelling this economy forward.
Well, Mark, this is Kelly Torrance. That's kind of what I wanted to ask you about, and related to what Steve was saying. Democrats and others have been predicting a recession for a while, but I look at consumer spending. You know, Super Saturday was a record day on retail spending, $34.4 billion, and consumer confidence, it's higher than it's been since, I think, 2001. A poll found that 76% of Americans think the economy is very good or somewhat good, and that's up from 67% last year. And since consumer spending drives about 70% of GDP, do we really need to worry that much about 2020? It's looking good to me, and I think consumers think so too.
I agree with you totally. Right now, the momentum certainly is in favor of the consumer continuing to spend. I mean, as you mentioned, elevated levels of confidence, household net worth at all-time record highs, wages rising, household saving rate around 8%, consumer debt burden has been lowered. I think all these things collectively means that what wages will continue to grow as a consequence of the tight labor market is going to feed into the economy, and we're seeing this. The most recent Atlanta GDP Now tracker is showing 2.1% growth here. So we're seeing trend or slightly even above trend growth as we start off the new year. So I think that's terrific, and I think that tailwind is going to persist.
I did find a negative, and that's IPOs. Look, 2019, Mark, was a string of IPO disappointments. The number of new listings fell by a fifth to 1,237 this year. That was the lowest level in 3 years, according to Dealogic. You have Uber, Lyft. I mean, stock prices well below where they priced at. And then WeWork and Endeavor, they didn't even get off the ground. What does the IPO market do in 2020?
Well, I expect probably more of the same, particularly if we're going to continue to see launches of these unicorn IPOs, where there are these massive companies that have been nurtured along by the private equity investors, turned over perhaps a couple of times. And by the time it gets to the public market, the awareness around them is high, but so is the valuation. And as a consequence, they don't support in the aftermarket, in the public market, the kind of growth or the kind of earnings projections that got them to the IPO market in the first place. And so unless we start to see, if you will, valuations reset to where the public can actually see the merits of the investment progress these companies are likely to make, instead of these hype stories around these things are just going to gobble up everything in their way, then I think we see more of the same. But that doesn't necessarily mean it's bad for the equity market, because there's still plenty of cash sidelined that's prepared to chase this market higher.
Yeah, there certainly is. And we are about to roll into a new decade. We've not only seen huge advances in technology, but global markets have added more than $25 trillion in value in the past 10 years. When you look at it like that, you say, wow, if you didn't put money in, I really missed out. Where exactly can investors look now for growth? Is it industrials, or is it still technology, or something else?
Well, it's hard to ignore technology at 23% of the S&P 500, and I don't think that genie is going back in the bottle anytime soon. It's a huge secular story that's going to stay intact for a long, long period of time. It'll have its moments where it may trail other sectors, and I think we're starting to see some signs of that, that perhaps if we do see this resumption of global economic activity, you're going to see the cyclical sectors, like one you mentioned, industrials, financials, perhaps materials, and even energy, become more leaders as we go into 2020. At least that's our view, as well as international markets whose valuations aren't as rich as those here in the United States. And again, if we see this uptick in global growth, they should benefit.
All right. Mark Luschini, thanks so much for the time. Happy New Year, sir.